Welcome back, cool cats. My family and I are still grieving the loss of our beloved cat, Sai, so tonight I'm going to be keeping things short and sweet. I'm going to be covering market analysis that's a continuation of what I shared in my last video, so if you missed that, please click the link above, then hop back over to this video. Last Thursday, February 27th, SPY broke pretty convincingly below this long-standing support line here in light blue that's been going on for over a year. And we came down into just above this main demand zone right here, which if we zoom out on the 4-hour time frame, you can see goes from basically about 575 up to about 582. And if we zoom back in on the 1-hour time frame, we can see right here that SPY was in this kind of descending channel and then broke into this more sideways channel here in purple. And after hitting support twice, we basically double bottomed off of demand right around 582 and then shot up like a rocket. So SPY is basically at a pivotal point right now. If it can break back above this previous support line and treat it as support again, then this could have been just a false breakdown. But if it gets back up to basically around 596 to 597 and struggles there and rejects, that could be confirmation that this giant rising wedge I've been covering for months is actually finally playing out, and this green candle, for lack of a better term, might be a dead cat bounce. If that's the case, then a measured move, a conservative measured move, could indicate that SPY could fall to about 540 in the coming weeks, and possibly even as low as about 475 in the coming months. Alternatively, if SPY can actually break back above this previous support, I could see it heading back up to this main resistance line, now around 615 to 616. We can see this week that on the weekly time frame, SPY actually broke below the 21 period simple moving average. It came all the way down to about 582, which is just the beginning of the weekly Ichimoku cloud support, and then it bounced sharply off of that. We couldn't even get down to the baseline, basically around 576. And on the daily time frame, we're actually back above some of this cloud resistance, but many people were expecting this to touch the 200-day simple moving average somewhere around 570, and I do think that that's still a possibility sometime this year. QQQ was also in a similar descending channel here, which became a little bit more sideways. It went from this blue channel, light blue channel, to this purple channel here. And it's no coincidence that as QQQ hit this main support line of this very wide channel here in purple, that it bounced very sharply. So right now, what we're looking at, and this is this exuberance line that I've covered in previous videos, where basically if we're above it, the market is really not very rational. If we're getting below it, it means that rational valuations are possible. So you can see we broke below that on Thursday. Now we're going to come back up and try to retest it. If we can break back above around 513, that could indicate that this was a false breakdown and that QQQ could be headed much higher. However, as I pointed out this big rising wedge here in white in this last video that I did, QQQ will absolutely have to get back above about 525 to 527 to confirm this as support again and confirm that this was a false breakdown. Otherwise, we could actually see it come up to that level, reject, and then possibly even break this much more significant support line here. And if that were to happen, I could see fear gripping the market. We've got a similar thing going on with QQQ on the weekly time frame. We can see that basically this support line of this ascending channel on the weekly lined up perfectly with the weekly Ichimoku cloud support as well. And although we got close to the 200-day simple moving average, we weren't able to break the support. So technically speaking, if we go by the past, QQQ could technically come all the way back up to basically like 600 and beyond. But of course, it will have to break this previous support around 522 to 523 and flip it back into support again and invalidate this giant rising wedge pattern. As I covered in my previous video, NVIDIA broke below this main multi-year support level on January 27th, came down and then retested the previous breakout and then rejected off of this line right here. As you can see, this resistance line in purple began on January 7th, and every single time that we've hit it, we've had a rejection off of it. So in my non-professional opinion, I think NVIDIA is likely to struggle somewhere around 127. It may struggle with around 130, and then it's absolutely going to struggle with about basically 139 to 140 if it can get back up there. Zooming out to the daily, if it can actually break this resistance line, the next point it's going to need to contend with is basically right around 153, which is the previous all-time high, and then the previous support line here, which would probably place it somewhere around 162 to 164. And where the multi-year support and resistance lines converge is basically between like 175 to 180. But I also covered downside targets in this last video of a potential multi-year rising wedge. And I have pointed this out before on the weekly time frame on the RSI. We have what looks like a bullish falling wedge pattern here on the RSI, indicating that strength could break out. And although I'm probably more bearish than I should be, this is indicating that NVIDIA could actually break out aggressively to the upside if support can hold. IWM small caps had a similar descending channel or a bearish channel that was going on, and we got down to this very strong support level around 211 to 212. This is also in demand, as I've shared in previous videos. IWM needs to break above about 215 to 216 to invalidate this downward channel now, and then it'll probably head back up to retest what used to be this much wider, much more significant ascending channel support somewhere probably around 222 to 223. If it can flip this support back into support again and it doesn't reject off of it, then technically speaking, IWM could start heading back up to basically around 229, 230. It definitely needs to get above 233 to 234 for continued upside. And on the flip side, if it actually comes back up here, retests and rejects, I could see this level around 211 to 212 finally getting broken. And the next significant level is down there about 199 to 200 even. On Friday, the VIX just broke and wicked above this main multi-year resistance that I've covered in that previous video, and then started to reject pretty sharply and actually broke this support line as well. If you've been following my videos, you knew that the pattern target breakout for this descending triangle was between 22 to 23, which we basically got there. And I said that if this main resistance line right here that goes back to 2022 got broken and we broke above it convincingly, it opened the door for a VIX of over 60, breaking the previous August 5th high. But something I'm definitely keeping in mind is this is a very significant resistance, and this still could represent a pullback. And look what happened leading up to August 5th. We had a big move up on the VIX, we had a pullback and consolidation, and then it took 3 full days before we got the full breakout on the VIX, where we got that high of almost 66. So for people that are saying, oh, just short the VIX, it's going to go back down to like 15 and below, that is a possibility, but as long as we're above this main resistance line right here as well, this multi-month resistance line, or somewhere in that area, there's a very big potential that this actually pushes back up and finally breaks this multi-year resistance. The breakout of this giant falling wedge on Dixie, the dollar strength index, is still playing out. I've got all my indicators thrown up right now. We can see on Friday on the 2-hour time frame, we basically got an upper Bollinger Band moved, and we pulled back to the 200 period moving average. And there's also a strong support level right there around 107.25. If this support between basically around 107 to 107.25 holds up, we could see Dixie actually begin to push back up. And if we zoom out to the 4-hour time frame, we can see we had the 200 period moving average where we got very close to it. That's basically where it was struggling. If it can get above about 107.75, it can make that final leg up to basically around 108.70. Which on the daily time frame would actually put it above Ichimoku cloud resistance. I've covered this symmetrical triangle pattern on the ADD, the market breadth indicator, in previous videos, and other than some wicks above and below, the symmetrical triangle pattern on the overall market still appears to be holding up, and it honestly has me uneasy. The apex for this is March 11th, and I'm pretty convinced that on or before that date, the market is either about to break up or down aggressively. And I hope that people are hedged accordingly. And even as I'm recording this video right now, let's take a look at /ES, the E-mini S&P 500 futures. We can see these lines on a chart are acting as reliable support and resistance. We got to the upper resistance of this channel and it already appears to be rejecting. Now, will this be a bigger correction or is this just a small pullback before we actually break out of the channel? I think we'll know Monday. And just for clarity, if we don't break above this channel, SPY could actually head back down to basically about 581 to 582 and possibly even make a new low. We've got a lot of economic data coming out next week, and please feel free to check that out on investing.com's economic calendar. But I think non-farm payrolls, the unemployment rate, and average hourly earnings out on Friday at 8:30 a.m. before the bell are going to be the most significant for the market. Last but not least, we've got to take a look at Bitcoin. I've shared in the past this giant rising wedge here, multi-week rising wedge. Last week, we actually got down, we touched the baseline of the Ichimoku cloud right here, basically around 80,000. We broke down a little bit lower, and now we've pushed back up pretty significantly. So we got into weekly Ichimoku cloud support right around this level and then pushed back up. However, when we zoom in on the daily, we can see we're actually below Ichimoku cloud resistance right now. So I could see Bitcoin coming back up, potentially retesting around 97 to 98,000, but it has to break that for further continuation to the upside. If it can break 97 to 98K, it kind of opens the door for it to actually head back up and retest this previous support line, probably somewhere around 108 to 109,000. And if it could break that and keep pushing up, the next resistance would be the main resistance line of the rising wedge pattern, probably somewhere around 121 to 122,000. However, if this is just a bounce and we actually end up rejecting from here, then this big rising wedge pattern could actually continue to play out, and it is targeting somewhere between about 59,000 to basically 62,000. And as always, nothing I've said is financial advice, and you should always consult a licensed financial advisor before making any financial decisions. Best of luck, cool cats, and God bless.